For financial summary, stay here. For full earnings call recording, skip to minute 2. ZIMLAB financial results for June 2025 quarter with YOY comparison. Revenue 71.76 crore rupees versus 81.82 crore rupees YOY with a change of -12.30%. Expenses 67.51 crore rupees versus 73.78 crore rupees YOY with a change of -8.50%. Other income 1.48 crore rupees versus 1 crore rupees YOY with a change of +48.00%. Profit before tax 2.43 crore rupees versus 1.24 crore rupees YOY with a change of +95.97%. Net profit 1.87 crore rupees versus 0.90 crore rupees YOY with a change of +107.78%. EPS 38 paise versus 0 rupees 0.18 YOY with a change of +111.11%. Operating profit 4.25 crore rupees versus 8.04 crore rupees YOY with a change of -47.14%.
Ladies and gentlemen, good day and welcome to the Zim Laboratories Limited Q1 FY2026 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Deepika Sharma from Go India Advisors. Thank you and over to you.
Thank you, Vishakha. Good afternoon, everyone, and welcome to the Q1 FY2026 earnings call of Zim Laboratories Limited. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Zulfikar Kamal, Director of Finance, Mr. Shyam Mohan Petro, Chief Financial Officer, and Mr. Zim Laboratories, Investor Relations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. May I now request the management to take us through the financial and business outlook, subsequent to which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Deepika. Good afternoon to everyone. This is Anwar Daud speaking. I just wish to add that along with me, we also have our Technical Director, Dr. C.M. Mainde. A warm welcome to all of you joining us today for Zim Laboratories Limited's earnings conference call for the first quarter ended June 30th, 2025. I trust you have had the opportunity to review our results and the earnings presentation available on the exchange. FY2026 has commenced in a period of both operational focus and external challenges. While we continue to advance our strategic priorities, the quarter also reflected softer order inflows in our innovation-led segments and the impact of an EU GMP inspection. Let me begin by sharing some key performance highlights. In Q1 FY2026, Zim reported a total operating income of 718 million compared to 818 million in Q1 25. EBITDA and PAT margins were impacted by lower top line and increase in depreciation and finance costs, resulting in a net loss of 19 million against a profit of 9 million in the same quarter last year. Pharmaceuticals continued to be the cornerstone of our top line. The innovation-led basket comprising new innovative products and oral thin films accounted for a lower share this quarter in addition to reduction in top line, primarily due to some deferments linked to geopolitical events in key markets in the Middle East. During the quarter, our facility underwent an EU GMP inspection conducted ahead of schedule in preparation for the launch of our oral thin film product in Germany. The inspection concluded with 2 critical observations and a few major observations. We have engaged external experts and are on track to submit our corrective and preventive action plan by August 31st, 2025. Post-regulatory review and approval implementation is expected to take at least 6 months. Our direct business presently, the exposure to the EU remains limited. On the regulatory and filings front, our development pipeline remains strong with 12 NIP products in progress, 8 of which have been filed in EU and the remaining nearing development. Our focus remains on accelerating product filings across markets while deepening partnerships in key geographies. In the quarter ahead, our priorities will be clear: to close the EU GMP CAPA process on schedule, sustain momentum in our base business, and strengthen our innovation-led growth engine. While near-term headwinds persist, our diversified market presence, strong partnerships, and disciplined execution position us to navigate these challenges and remain on track with our long-term growth strategy. With that, I will now hand over to Mr. Shyam Patro, who will walk you through the financial highlights for Q1 FY2026 in greater detail.
Thank you, sir. Good afternoon to all our esteemed participants. Let me present the overall financial results for Q1 FY2026. The total operating income for Q1 stood at rupees 718 million, reflecting a decline of 12.3% year-on-year basis. This degrowth was primarily driven by NIP orders not materialized due to the ongoing disruptions in the Middle East. Additionally, the contribution of the innovative products to the top line declined, impacting the supply challenges in the MENA region arising from the geopolitical instability. That said, our income from licensing is steadily progressing, and this quarter we reached a revenue of 40 million rupees from NIP license. On profitability, our EBITDA stood at 57 million rupees with a margin of 7.9%, reflecting a 36.7% decline on year-on-year basis. The PAT came in at a loss of 19 million rupees compared to the profit of 9 million rupees last year, a margin of -2.6%. In terms of business mix, our pharma segment contributed to around 78% of the revenue, while the Nutra contributed 22%. In line with our historical trend, the year-on-year drop in Nutra revenue was mainly on account of lower Nutra PFI business, particularly in the MENA region. Our export contributed 602 million rupees, a decline of 15.2% year-on-year basis compared to rupees 709 million in Q1 FY2025, driven by lower innovative product contribution and supply challenges in MENA. On the other hand, our Indian business recorded robust growth of 30.2% year-on-year, reaching rupees 100 million, aided by higher value institutional business. The revenue contribution from NIP and OTF stood at rupees 46 million, comprising rupees 12 million from NIP and rupees 34 million from OTF, representing 6.2% of the operating income, including license fees. The contribution stood at 12.9%. The licensing milestone payments agreements of the innovative products across regions stood at rupees 48 million in Q1 compared to 4 million in Q1 last year. On the R&D front, the total of rupees 79 million was allocated in this quarter, focusing on product development, dossier upgrades, and infrastructure. This includes rupees 19 million specifically for BE studies, that is bioequivalent studies, and registrations to advance the innovative product pipeline. During the quarter, we made a progress in NIP product development and filing with 8 products developed and filed in the EU. Our pipeline remains strong, and we continue to strengthen our presence in ROW as well as emerging countries. while we await further assessment regarding our entry into the European region. Thank you.
Hello. Should I start?
I wish to, with this, I would like to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning, everyone. So my first question is, if you can give us some sense, about the kind of observation we have on the 2 critical and 8 major, and whether the data integrity issue is involved in this or not. And on the same line, we have already cleared, UGMP twice. So in your view, what has gone wrong this time in terms of, processes or infrastructure? And what do we need to do to kind of, get back to that UGMP approval status? And what is the cost involved? What are the steps that we need to take in terms of CAPA? If you can elaborate on that.
Sure, Daniel. I think this question has been most of the attendees' mind, so it is a good answer. So none of the observations are on direct product quality issues. Most observations, including the critical, pertain to documentation problems and to reliance on manual systems, as judged by the inspectors who came this time. The last 3 inspections which we have faced, these observations were not there from the various inspectors who have come. We are trying to correct this in a phased manner through appropriate automation and electronic data handling wherever feasible. We will be ready with the CAPA plan in a month, and we are confident that we will have the CAPA plan complete within 6 to 9 months. So that's the idea. So we have some alternate plans as well. As we proceed, we can brief you about the plans. We do have a robust emerging markets and ROW business, and we continue to obtain registration. At this moment, as I have already said, the EU business is not part of the equation for, we don't have that, it won't have that much of an impact this year. That's not, we don't foresee that. Maybe, I hope to some extent it can clarify the question.
Right, sir. Yeah, it does. So what's the cost that you think we'll have to, spend money?
It's mostly related to documentation. And of course, whenever you change your system of documentation and other things, definitely there's a cost of training, cost of hiring consultants who will actually take the company through that process, and purchase and the implementation of the electronic systems which will be procured, and data management system. So that's not a very high cost, because the questions were not on the facilities and the infrastructure that we have. It's on the excessive reliance on manual documentation as observed during this inspection, not before this.
Okay, got it, sir. So second question is, since now...
Sorry to interrupt you, sir. I will request you to get back to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Mohit Jangir from Inved Research. Please go ahead.
Yeah, hi, good morning.
Good morning.
We had asked in earlier concalls whether EU and UK inspection was compulsory or due for us. But in the earlier concall, the view of the management was that we are already EU approved or EU compliant. So was it a surprise inspection from the authorities? And will we keep on getting emails from them even if we are non-compliant, even from UK?
Yes, let Dr. Mende answer this because it's a little bit of a nitty-gritty here. But
Hi, this is Dr. Mende. Good morning. See, UK is an independent entity and all submission after the Brexit are handled independently. So our UK program will not at all get affected by this inspection. However, we are, as we Dr. Anwar MD has mentioned, we will be ready with the CAPA. So that may not affect our actual financials for the EU business this year.
Okay, sir. My second question is on the near-term guidance. As you clearly stated that your base business will not be affected. So what is the kind of growth that you are targeting in FY26? And will there be any reduction in R&D costs pertaining to this EU GMP non-compliance because the filings will be reduced from our end?
Good morning. This is Zulfikar Kamal, Finance Director. So the guidance what we are giving right now is on the base business, which will continue as usual, and that will not have any impact as far as the regular business is concerned. The upside of EU was considered in the second and third quarter. Then there may be chances there will be some shift from that to the next year. As far as the R&D cost is concerned, it will continue to on the same lines. Our development and the filing will continue as per the same spending what we are doing on the ratio in the previous year. Thank you.
Okay, sir. My last question is on when we are filing that CAPA and the timeline by when we will be compliant again. Thank you.
it will take us 6 to 9 months from our side. Now it all depends on because whenever you have these kind of observations, usually there is a re-inspection. So it depends upon them coming for the re-inspection and after that we hope things as far as the EU GM this plan will be accelerated because we'll keep filing, we'll keep investing. We have a strong pipeline as well. So there is a delay, but the story continues.
Yeah.
Okay. Thank you. Thank you.
Yeah, our filing will not get affected because we can file. Also, we are submitting the CAPA by end of this month, and as mentioned, within the next 6 months we will get a re-inspection. So that's our plan. So it is like that 8 to 9 months is a total timeline for all activities.
Okay. Thank you.
Thank you. The next question is from the line of Gautam Gupta, an individual investor. Please go ahead.
Hello, am I audible?
Yeah, you are.
Yeah, good afternoon. I wanted to ask that this time we can see an operating deleverage because of Middle East issues. So when can we see an operating leverage? I mean, at what income level quarterly can we see an operating leverage to play out?
As a policy, you know that we don't give out number. Sorry?
I'm not okay. I couldn't hear you.
Sorry to interrupt you, Mr. Gautam,
I think
will request you to
everybody has to
mute
move.
yourself.
Okay, have you muted?
Yeah, I've unmuted.
So you have to mute yourself.
Mute myself. I'm not able to. Hello?
Yes. Have you
Now
muted?
you can speak.
Yeah, I wanted to ask that this time we can see an operating deleverage playing out because of Middle East issues that we have faced, thereby resulting in a decrease in an top line. When can we
it's coming back to normal. It's coming back to normal. And in the next 2 quarters, we'll see the thing evening out. and
No, I
compensation.
want. And can we see an operating leverage to play out at what income level, top line level can we see from being a generic player to a branded generic player? Margins usually go up to 16, 18, 20%. When can we see that?
I think we are not able to. We are, as far as the specific guidelines of the brand and the market mix, as of now, the base business is continuing. And as we have discussed, our EU-only business has been little bit impacted from the third quarter onwards. It may be shifted to next year. As far as the base business and regular business will continue as a generic, the formulation business will be started basically in Europe and emerging markets, which will be as per the existing product mix which is going on.
Okay. Thank you so much.
Thank you. The next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Hi, am I audible?
Yeah, you are.
Okay. Could you share the updates on the progress of the new innovative products, NIPs, and their expected commercialization timelines?
Yeah. So, we have been filing in various geographies. So, ROW and emerging market is already ongoing, and we keep on reporting these milestones to you. The last milestone was receiving TGA approval for tamsulosin and dutasteride, one of our interesting products. I think 3 years back. So that will continue. Our partners are also filing in EU. What was the next question?
No, their expected commercialization timelines.
Yeah, most of the commercialization, excepting for the commercialization in UK, were to take place in the last quarter of this financial. Okay, that shifted by 3 to 6 months. In 26 is what we are looking at the commercialization to happen. As they've already given this guidance the last time, it stands. Some of the milestones are delayed by 6 months approximately.
Okay. And what proportion of the revenue this quarter came actually from the recently launched products?
We don't give that guidance. Minimal it was actually.
No, I'm not talking about the guidance. I'm talking about this quarter, whatever revenues we did, how much of it came from the recently launched products?
Recently, most are existing products, which have been, the company has been producing them, they are part of the revenue mix in the last several quarters. So, if you ask about the new or recently launched, no new product has been launched in this quarter.
Okay. So, just
most of the products are being launched in new geography. So that's a different question, and it has a different answer as well. So but I don't have the mix with me. Maybe the next call we can break that up for you.
Okay. And are there any partnerships or licensing deals in this in the pipeline?
Yes. Partnerships are continuing. The partners show the partnerships and the agreements are showing a strong traction. We are in discussing with various partners. They understand that the company has very interesting products which can make a difference in their respective portfolios. We are in touch with them even during this period of the GMP inspection and everything. We have seen that the clients, the potential and existing clients have shown continued interest in the partnership with them.
Okay. So even the setback of EU GMP has not affected the clients or the other partnerships?
That seems to be the feeling, and that seems to be what shall we call it? The
Trust of that is the trust of all our partners, that even little bit setback due to this thing, all our partners are with us, and we are continuing our EU-UK program with them.
So the guidance which the company and the, for the confidence
Sorry
of the
to
company.
interrupt you,
Okay,
sir.
I'll call back in. No
with
problem.
you. Yeah. Thank you.
Thank you.
The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. If we look at our company, the kind of transformation we have been looking in the company was expected to largely come from the NIP products directed towards the EU market. With this EU regulatory issue, I think this has been significantly pushed back. When do you expect to start selling some of the products from our plant, let's say FY27 second half, or when do you practically expect to start supplying these products from there?
This question has a different actually elements to it. You know that we already have a name. So in 6 to 9 months, when the re-inspection takes place, after that we will be in a position to be in the market, and all our partners continue to support us. That's number one. Then there are different methods of continuing business even in the EU and even in the other regulatory markets, such as shifting the products that already have MAs to alternate sites. We are also trying to look at those possibilities. We've already started speaking to different sites which are EU and have other regulatory approvals as well. There's a third opportunity where the products which are in short supply in some markets can, if the partners so wish, they can obtain special permission to supply to special approvals for such products, and the supplies can continue if they are willing to. If the partners are willing to trigger these kind of approvals. So these are the three kind of proactive measures which the company is planning to take, and we have received some positive feedback from some of our partners on being able to do these things with us.
So are you referring to some of the products like pancreatin, where but for that I think MA is yet to be received, right?
Yes. It is the 105 days.
We, as per our calendar, 105 days response from the EU has been received, and hopefully by end of this month, our response will be filed. And as a product has priority, it will not get affected to grant MA. That is for this thing. And our other program, like as I mentioned in the beginning, that our UK program, as the UK is the separate entity from the Brexit, it will not get affected. So the product is in the shortage will go ahead. If we get a MA, the marketing will be happen for that product.
Sure. So second question was on our existing NIP plus OTF and the base business. So this quarter we have seen significant pressure even on our NIP plus OTF product that we sell in our existing markets like India and Middle East. So what is the reason for that? When do you expect to come back to 15-20 crore of quarterly run rate on that front, as well as on our base business?
The geopolitical thing can be described in a little more detailed manner just for everybody's understanding as well. There were basically a lot of these airspace problems in supplying to the Middle East for some time. For a month, most of these, most of our PFI products actually go through air. So money transfer, availability of LCs, as well as the airspace problems existed for some time. The material was ready, but dispatch was not possible. So after that, things have started kind of easing out, and we have supplied some of the products which couldn't go in the last quarter. So it's ongoing, and we hope we are looking forward to the compensation taking place in the next 2 quarters.
Sure. So we should see improvement in the sales in
Yes.
our base
That's right.
business as well
That's
as
right.
NIP
Yeah,
plus
that's
OTF.
our expectation.
Sure. Okay. Thank you, Mr. Aldous.
Thank you. The next question is from the line of Rajat, an independent investor. Please go ahead.
Am I audible?
Yeah.
Good afternoon, Dr. Anwar. So, Dr. Anwar, I feel like we are putting almost 7 to 8% of our revenue into R&D. And also we are developing a lot of NIP and new products into the market. But still, numbers are very weak. I'm not able to see any significant contribution of our effort into the revenue. So, could you please explain on that?
Yes, of course. I mean, you are I'm sure you follow pharmaceutical companies. Our products get developed over a period of time. We are only 3 years in the market. So expenditure into these products has been there, and the development also includes bioequivalence and registration filings. All these things take a time. There is a big cycle. And we are nearing the maturation of that cycle for some of our products. In about 9 to 12 months, you will find products, everything going well, of course. You will find many of these products entering several markets, including the regulated ones, hopefully. So it's a cycle issue rather than any other issue, because this is a company transiting itself into regulatory markets and the regulatory space. A lot of, as you must have heard Dr. Mende speaking about 105, 108 days, 110 days, and then the reply. All these things take their own time. We are ready with the products, of course, but the filing, and there are sometimes the queries require an answer where at least a month or a month and a half is spent in providing more details if they are required by the regulatory agency. As you know, there has been more and more regulatory tightening all across the globe on all these filings. So it's not new to us. Unfortunately for us, the entire the work that we have done in the last 5 years has is just entering that phase of an interesting phase for the company, and we are waiting, and we have partners who also believe in us. So it's not just Zim Laboratories which is filing these products; the partners are also filing. Sometimes we depend on them to have their approval in place, and then we have to depend on them to file the products.
Thank you for the well-detailed explanation. And it's very heartening to see that we are getting so many approvals in the Australian market, and I want to congratulate you all for them. That's all from my side. Thank you, Doctor.
Thank you.
Thank you. The next question is from the line of Satyam Vadera from Profitmart Securities. Please go ahead.
Hello, am I audible?
Yeah.
Actually, I have a couple of questions. Which segment showed the highest growth in Q1 and what drove the performance? And my second question is, how did the export market perform this quarter compared to domestic market? Also, are there any new product launches or regulatory approvals contributing significantly in Q1?
I think the export formulation showed the highest growth. ODS business has shown a very interesting upward traction in export as well as in the institutional domestic business. Government business in general is showing doubled, actually. So, all interesting things happening. NIP products are doing well in the domestic market as well.
And are there any new launches or regulatory approvals that will be contributing?
Well, some regulatory approvals took place. We have reported them. PGA approvals have taken place. There are some approvals in the African and the Middle Eastern markets as well. But from time to time, we keep on putting these, disclosing these. So Probably, shouldn't take your time on that. Just we are very, we frequently come and make these things public.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello.
Hi.
Yeah, good afternoon, sir.
Good afternoon.
Just a few questions, sir. One was, you mentioned that, we got the MA for Tamsulosin from the Australian authorities.
That's right.
Given this EU GMP issue, so does that have an impact on the sales?
So, Dr. Bende will give you this answer because we are, taking personal care of this.
Actually, if you see, this is a very unique product, and the Australian government is a very scientifically evaluated, and we got the approval here. Of course, we can say that little bit 1 or 2 months it can be affected due to this thing, but we are finding the TGA approved site. Already we are in the negotiation with them, so we can transfer our product to that particular TGA approved site, which will take 3 months for the approval. So we can have a chance to market this product in this year, maybe in the last quarter. That is what we are thinking in a very optimistic way.
And sir, just on the opposite side of this, if you were to take a rather pessimistic view, then what would be what are the challenges on the other side? Just to get both the spectrums.
The optimistic as well as the pessimistic view is that Zim had filed this through its subsidiary, through its partner. The idea always was to license it to the right partner. Those discussions, even after we received the approval, those discussions were ongoing because there were 2 or 3 partners who were intensely negotiating with us. That negotiation will be over in a month or a month and a half. So, in that sense, we have not lost time because of any issue. And once those negotiations are over, whichever partner takes it up will need at least 3 or 4 months to prepare for the launch. So, I think there is some loss of time in the product being in the market, but it's not an impact of, it's not a very large impact. Because for this product in Australia, because there were no agreements and we don't have feet on the street in Australia. We always intended to out-license it. Now we'll be selling the MA after we conclude our agreement with the partner, and as I said, there are 2 or 3 partners already in discussion with them.
Okay. So if that concludes, then we have the option of manufacturing it from our TGA approved.
We are taking all proactive measures. We are trying to mitigate this, and I think we have that capability to mitigate these kind of events.
Right.
So we are at it.
So, sir, I think also in an earlier question, in response to an earlier question, you said there are 3 options. One is you can transfer the site to an approved, to an EAGMP approved
or TGA approved site. Yeah.
For your other MA products. So, sir, in this, the 2-part question. One is it something that our partners are telling us because they would have had their own plans of launching these products wherever we've got the approval. So
if you see our filing and our partnerships are already been listed. Most of the partnerships actually are quite recent. If you see, once upon a time, the agreement would take place the moment the product was ready. But or there would be co-development. Now, in Europe, the trend is for the product to be ready and even filed when the partner becomes interested and starts discussing these agreements with us. So most of the agreements, we have at this moment are in the last 3 or 4 quarters. And as these agreements are quite recent, the filings also are quite recent. They are not more than 6 months.
6 to 8 months old.
Yeah. So they are ongoing filings. Even the filings that, for example, the filing for TGA for tamsulosin dutasteride is about, for which Zim got the MA, is about
1 year, 1.5 years.
1.5 years. So it's a very early time at this moment as far as Zim is concerned for the filing. And there's always a window, and as Dr. Mahendra said, that if there's an alternate site, we can, within 3 months, we can add that as an additional site and continue to provide the product to the client. And there are other clients as well, if they are in a position to launch, although it's early, I would say they will take that a little bit of time, excepting for the UK launch, which could come this year, as Dr. Mahendra said. All the other filings would, by the time the MAs come in, we would either be ready with our own premises successfully, complied, or we would have an alternate site. If not us, then most of the agreements that we have signed, the partners also have their own preferred sites, and we are discussing with them.
I would like to mention one thing, as earlier Dr. Daud has mentioned. We are writing a CAPA, and we are very much confident that within the 8 to 9 months we will come back, because our deficiencies are not related to any product related deficiency. They are just deficiencies are related to the manual system of handling the documents. That's all. So we have to just put that electronic system. So it's not very serious thing, which you can see from the time to time. You can see that also in the progress.
Okay, so actually my question was specific to the MAs that we've already received and where the partnership is already in place. So case being viewpoint. Yeah. So because our partner would have also made some arrangements, right? I mean, because we already had the EU GMP, it was one would have thought there would not be any issues. Of course, contingencies are never known. So I understand.
Most that we have at this moment are our own MAs, which are, I don't know, last time many of the participants who are there also visited our site. This is a fallback for this. We don't believe in being in, at this moment, in being in Europe on our own with our own MA and distribution system. Obviously, we are so new that we don't foresee Zim being there with its own MA and distributing the products. So, there are very few MAs, there is some oral thin film MAs which are obtained by the partner. There is no MA which I know of the NIP product which a partner put it, because he is in a position to launch.
No, for sure, sir. No, I understand that very well. My only question was, sir, like if, let's say, Neurax Farm, which we are partnering with, which you are publicly announced.
Yes, they have shown an inclination to launch their product in the last 2 quarters of 26. Year 26. So that's the information we have. They are preparing a big launch strategy, but they will be launching it in the last 2 quarters of 26. Financial year 26.
Okay.
So probably won't. They wouldn't have that impact.
So financial year, which is Q3 and Q4 for us, right? Essentially.
Not ours. Calendar year 26.
Calendar year 26.
Yeah.
Okay. So in that sense, that product does not have any impact as such
Exactly.
Got it. From your...
Sorry to interrupt you, sir. May I request you to rejoin the queue for follow-up questions,
Sure.
as there are
I will
several
join that.
participants.
Yeah, I will join that. Thank you.
Thank you. The next question is from the line of Rohit from Samatva Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So a couple of questions. The first question, do we have any direct or indirect exports to Iran at this point of time?
We are exporting to several customers in the Middle East. So we are not, because of confidentiality reasons, we are not in a position to know exactly who is using, because there are very large markets from Dubai. There are, like Yemen, like Iraq, Iran is also there. So we are not in a position. We try to verify as much as possible. That is there. Of course, you know that under the Geneva Convention, health and pharmaceuticals are not covered by any sanction anywhere in the world. All our exports are distributed in that way.
So how much Middle East as a overall in the basket, how much would that contribute to our revenue, and how much did we lose because of the airspace being shut?
We are seeing some turbulence and disturbances which are periodic and temporary. I don't think we will lose anything, because the business is quite sticky. It's the legacy business of the company which has remained in all the same things. Middle East has been in this political turmoil, not today, only when the intensity is increased, but since the last 35 years. So we haven't seen, because of the stickiness of the business, we haven't seen any decrease. We've always increased the business. We don't foresee any, excepting for temporary disturbances, any permanent effect on the business.
Got it. So my second question is, if so this EU GMP, assume if in a worst case scenario, if we don't get it within the 6 to 9 months, are there any penalties that we have to pay to our partners, or are there any penalties if the EU GMP doesn't come through?
Penalties actually come after they launch the product. There is hardly any product in the EU which the company has. And at this moment, not only do we have a backup strategy to have our own MAs and other things, but this is not something which is unique to Zim Laboratories. Many companies get these kind of observations, and they come out of it in due course of time. Ours is, fortunately for us, ours is not really infrastructural or quality related. So that's at least the positive side of it, that none of these NIP products which are so complex to develop and supply are those have not been shown to have any defect or quality issue. So we are heartened by that, because those were also, during the inspection, those were also touched upon and verified. So at least that story, I would say, is very strongly there. And regarding the, I think I lost a little bit of my track there. What was the question again, please?
If there are any penalties on because of the EU GMP,
where like I was saying, there are no penalties. All agreements have the clause for Zim being able to supply from alternate sites. In case Zim is not able to get a successful alternate site, then there are provisions on certain terms and conditions to provide the technology transfer to the partner to alternative sites of their choosing, which is also an option for them, because that will trigger technology transfer fees. So these are all opportunities. We are looking at all of them as opportunities which can open up as time passes. At this moment, we are clear and very focused on getting the CAPA in place and implementing it.
Got it. So just
currently looking for alternate sites of our own where the product can be transferred with full confidence.
So just the Middle East number, what is it as an overall percentage of our revenues right now?
30%, approximately.
30%. And last year, what would be the number? Similar?
It's always remains.
Oh. Thank you so much, sir, and all the very best. Thank you.
Sure.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Shreya Chatterjee from Ageless Capital. Please go ahead.
Hello. Good afternoon.
Good afternoon.
Yeah, I have just 2 questions. So one is when you mention about the 2 critical failures that has been mentioned by UGMP, and you say that it is all related to process and facilities, nothing related to product quality issues. So then why are they being classified as critical? So and then if you don't get the approvals, as you mentioned that you have a technology transfer, everything in place. So then what will be your guidance for your future product launch, especially the ones that have been approved? The 4 products that have already got ABS.
Yeah, I would like to mention here that you mentioned that we have 2 critical. See, first of all, the critical observations are given where we need to have a go for the re-inspection. In our case, we are using a manual system for the documentation. And in current GMP practices and all these things, manual system is accepted, but particularly at this moment, considering our lot of products going to the EU and a lot of critical products going to EU, the German auditors who visited, they taken a view that it will be better to have a electronic regulated system. So their major objections are to the data entry in a manual way. So that is the observation they given. So because this is the observation which can say that your data has to be electronically entered. We have not received any observation particularly to the failure of our product. We have 8 products submitted to you. No observation regarding any product quality issues or any of the subsequent issue related to stability or not this thing. So that's why we had engaged an external consultant who has got extensive experience on this type of activity. So we are very much sure. See, and of course, another way every company in their tenure has get some sort of such non-compliance for a short time. So this is a usual activity. Also, you yourself mentioned that we are making a risk mitigation strategy where we are also getting it to the another alternative side. So in the future, we will have a more robust system and which will not affect our financials in future. So we are already on that line now.
So what is the alternative side?
That we cannot disclose at this moment to you. Once we finalize everything, then only we can disclose.
No, the company is highly compliant and we keep on making these disclosures as and when the time is appropriate.
And so my second question is on the Middle East business has always been quite volatile. Like last year also we had seen that these issues take up in the first quarter results. And then you had mentioned that you are taking some strategies also, like forex management and all. So could you give a bit of highlight into those? What exactly are you doing to mitigate this?
You can only in the first quarter we have seen little bit of traction. The things have been now sorted out. The second and third quarter we are able to compensate everything. And on the forex front, it is on the favorable side. So as of now, there is no major worry on that angle. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Mohit Jain from Devan Choksi PMS. Please go ahead.
Yeah, I think. Thank you.
Hello?
Hello. The participant has dropped out. I'll take the next question. So the next question is from the line of Jasmine Kaur from Fortuna PMS. Please go ahead.
Yeah, hi. Can you hear me?
Yes, yes.
Okay. Thank you for taking my question. Sir, regarding the MAs for the NIP products, we have in EU, we currently have two, but there are many other filings that are there already in place. So with the current compliance issue that we are facing, sir, are the MAs timeline also going to get affected? What is your view on that, sir?
Yeah, I would like to tell you the grant of the MA is not at all affected by this inspection. The marketing of the product, sales of the product may get affected, but not MA. MA will continue to grow.
Okay. Okay, so for the balance NIPs, we can see the MAs coming.
Yeah.
Okay. So you also mentioned in a previous participant question that for Neuraxpharm partnership, we are expecting that the launch will happen in the second half of the current financial year. But ultimately, is that the manufacturing?
Calendar year 26.
Next year.
Calendar year 26.
Yeah.
Okay, next year.
Yeah. They have actually postponed this by, they have already postponed it by 6 to 8 months. Because they have a big launch plan, but I think they were preparing for this. They have filed a few variations also in the email. They are waiting for the variations to be approved. The emails are there. They find some variations on those emails as well.
Okay, because ultimately the manufacturing of those will be in your plant only, right? I mean, once they launch it.
Right. That's right. It will be in our plant. Hopefully we'll be in time too for their launch, because their launch is a little delayed by them, not by them.
Okay. So one more thing on your UAE partnership with Global Pharma. So how is that coming along, and how is that fared so far? And
yeah. So this is Zulfikar Kamal. So the Global Pharma partnership is well within. Going on very nice. They have filed around 5 products, and we have received the MA in their name, and we have received the first order, and we expect it to complete the order within this month or in the second quarter.
Okay. So any quantification on
sorry to interrupt you, Ms. Jasmine. I will request you to join back the queue for follow-up question. Thank you.
Sure.
The next question is from the line of Mohit Jain from Devan Choksi PMS. Please go ahead.
Hello, can you hear me?
Yes, sir.
Yeah. So you mentioned in the last question that you have 2 critical inspection which was shown, and one you are saying that it's mainly because of manual data which needs to be done electronic. This is one, or both the critical information which has come over is regarding this only? Because
both are related to the manual, over dependent on manual documentation. Both the critical are actually dependent on that.
Okay, both. So my question is, my second question is on the follow-up on this. So if you need to reject the, manual things to be done electronically, and I guess you'll also be hiring few external experts and all. What would be your total cost in the next 6 months in terms of, if you could quantify it, just on the cost that would be spent just on rectifying these issues?
We are just starting, but companies like us actually, we every year we invest in upgradation of our facilities and our infrastructure, our systems. This is something which, because of the last 3 inspections, we thought was not that important for the inspector. But I think it will be in the budget that we already have. I mean, we don't need any extra budget to any extra standout expense. We have a consultant. We have always had a consultant. This time, maybe this consultant will specialize in helping us in the electronic data and nothing. In fact, in the end, it could result in some savings as the over-dependence on manual system is reduced. Perhaps it would help to actually control the manpower and the man-hour which we spend on documentation would be reduced. So it could lead to some efficiencies as well.
All right, sir. Thank you. Thank you for addressing.
Thank you. The next question is from the line of Sai Das, an individual investor. Please go ahead.
Yes, please.
Yeah, my questions have been answered. Thank you. Actually, hello. Are you able to hear me, guys?
Yes, please.
Yeah. Actually, let me just ask this. So now you say that, you can basically source your, those products that you have, the MA from third parties. I mean, assuming that you don't get the EU GMP on time. So once you, let's say, source it from third parties, do you need any kind of an approval, regulatory approval, or once you source it, you can just go ahead? That's all. That's my question.
Yeah, here what we are doing, we are not going to any new party. We are going to the party who has already approval of that particular agency. Once the party has got approval for that agency, then we have to just take some technology transfer to that particular site, and we have to submit what we call the validation data. Once we have submitted this thing, they generally approve the product. If we have not made any changes in the whatever the we grant, if we adopt same process, everything, it's a matter of 3 to 4 months only. It is not much. Variation has to be filed. Variation has to file, and it is a minor variation of the site change if the site is already approved by that particular agency.
Yeah.
Like we have got any of this thing, dutasteride tamsulosin from TGA, Australia. And now we are finding out the site which has already been approved by the TGA. So this involves only the product transfer, and that product is also sellable. Whatever the batches we take for the technology transfer, that batches are sellable. So this is something which doesn't affect much of this thing, time.
Okay. Then can we say that this 3 to 4 months of data validation, which you are saying is going to be a minor issue, or not an issue, minor process, so this can basically, blend well into our timelines, since we already have a 6 month timeline to start our, EU supplies or whatever supplies. So this will easily blend into that. That will easily blend into that.
Yeah. It looks like that, although we are not giving that guidance as yet. We are saying we are delayed by 6 to 9 months.
Yeah.
But the other processes are, they come a little late, so probably in the end we might end up with a few months loss at the most. Yeah.
Okay. Worst case. Thank you very much.
Yeah.
Thank you. The next question is from the line of Sujit Agarwal, an individual investor. Please go ahead.
Hello. Pujit Agarwal here. And I just had 2 questions. The first question was related to the commercialization of tech transfer. Like, how exactly will the commercialization work? What kind of, will we get a one-time fee? Will we get a recurring fee? Will it be royalty-based? I just wanted to understand a little bit about that.
Yeah, I will just explain you. We are not transferring our product to anybody. What we are going to do, we will have a toll manufacturing or contract manufacturing arrangement. There are many facilities which are approved by the particular agencies, EU, TJ or MHRA, but they do not have any product. So what they do, they accept the product, and they charge the toll manufacturing fee or what we call the conversion fee. So it is the same amount what we are also incurring in the fees for our manufacturing. Slightly here and there will be there.
So, like, in terms of margins, effectively, can we still generate, like, let's say, like, 15 odd % EBITDA margin on this? Like, I mean, in terms of gross margin, like, I just want to...
We will look after in a different way. Our NIP product we already kept the scope of that, so it will not affect overall to the costing of the product.
Got it. And just wanted to understand, the second question was regarding the fact that our H2 revenue has been deferred quite a bit. So, like, I just wanted to understand, like, year on year, like, will we still be able to achieve a revenue of, let's say, around 390 odd crores? And, how will the debt repayment look like going ahead?
Yeah. So, as we have mentioned in the earlier part of the call, that our revenue, the EU revenue upside has been pushed in the next financial year. The rest, our base business remains the same. The overall guidance remains the same as far as the base business is concerned, and we will be able to achieve similar growth what we have achieved last year on the base business. And as far as the debt repayment is concerned, we have already, the gearing is much under control. It is around 4.47, that is 47% of the equity. And the DCR again remains the same. It is around quite comfortable. And we have been able to do the commitment for the revenue repayments for the coming year with the last year basis turnover with some similar growth.
Got it. Okay, thank you.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah. So just two questions again. So one was on Mr. Kamal sir's statement just now. So, sir, last year we saw some degrowth in the base business. So, like, we did around 306 crores ex of the OTF and IP business that we had. So, do you see those kind of levels this year, or do you see a growth on that, given whatever challenges you've seen in Q1? And so second question on the EU. So I think one part of our strategy was that we will use the MA in other markets also, which is what we did last year, around 70 odd crores of revenue. So how do you see this year, excluding Europe, which is delayed by say 2 quarters or so? How do you see that business, which we did 70 odd crores in the financial year 25? So what is the growth ex of EU there? How are you thinking? Yeah.
No, so the NIP product business for other than EU market, that is in the ROW market, will continue as it is, and there is also some growth in the base business as well as on the NIP business from the other emerging and ROW markets. As we have already mentioned in the previous calls, that we are filing our NIP products in other markets. So that market, they are not directly dependent on EU supplies, and we can have a specific country-wise inspection, which is already there, and we can supply the goods to other markets except the EU part. Only the EU upside has been postponed. The base business and the NIP business in ROW market have strong, we are getting the strong signals, and we will be able to continue to supply there.
And so on the base business, how do you see that ex of NIP in the ROW markets?
It will have a similar, it will start picking up from the Q2, and we'll be able to give the exact guidance post H1.
Okay, sir. Fine, sir. I think all the very best, sir.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to the management for closing comments.
Thank you for the opportunity to be able to present our report. And I think we've answered, and we look forward to your support in these coming months as well. We remain confident on the product and the overall strategy that we have. Maybe with a little bit of delays due to the inspection as well as some geopolitical things. But this is part of every organization's journey as well. In general, there is no market which can be called stable at this moment, including the regulated market. So it's something which every business, every pharmaceutical business, as well as the non-pharmaceutical businesses are facing. As an organization, as a country, we remain optimistic about the results that we will be and the performance that we will be able to deliver to our shareholders and stakeholders in the coming days. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Go India Advisors and Zim Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.